investment. I am a sophomore here at Arizona State University studying supply chain management and pursuing my MBA in investment banking. And given that this is a trading and investing club, we feel it prudent to define what our specialty is. And my specialty in trading for a good amount of time has been in UGAS and DGAS. They're two different ticker symbols. Commodities trading, they represent UGAS being, hey, how are you? The natural gas market, and DGAS being the oil market. They're two inverse ETFs or exchange traded funds, and that's what I focus on.
All right, hey guys, I'm Nick Everly-Taylor. I'm the vice president here at TMI. I'm studying finance. I'm also a sophomore at Carey, and I specialize in penny stocks. So those are stocks that are trading at $5 or less per share. They carry a lot of volatility, so a lot of risk, but potentially high rewards as well.
And I'm Victor Diaz. I'm a junior. I'm studying finance as well, and I specialize in options trading.
Yes. And he's the secretary of the club, so like he said, feel free to reach out to him for communication, details about upcoming meetings, scholarship competition, or whatever it just might be. Like I said, given that most of the people here are new members, we want to define what exactly TMI is, what we're striving for, what the goals of TMI are, and as a participant in TMI, what you can hope to get out of the club. So we're really about three different things. Primarily, we're about discussion, then fun, and then learning. And we feel like each one of these things is interdependent, that you can't have one really without the other. So discussion is definitely the most important thing. And that is, this is much more than just a club where you'll come in and listen to presentations. Obviously today, we're giving a presentation on day trading and swing trading strategies, but we don't know everything there is to know about trading or investing, nor does any particular person. But when we merge our knowledge and we can merge our discussion to being, if I don't know the answer to a question, that great, but somebody out here does, feel free to answer that question. Right? We want to make this an open discussion format, which is part of the reason why we have the Slack channel. If you haven't joined that, we'll talk about that later. But you can talk at any point in time with any of the members in the student organization about strategies that you're using, what they think, the logic behind them, and just fostering an environment which we feel free to discuss. And the second thing is competition. So if you haven't already, we have a competition going on right now, right? And that is an Investopedia simulation competition, right? And at the end of this semester, specifically on December 10th, that will be worth a $1,000 cash scholarship, right? So you can feel free to join, and whoever makes the most amount of money using whatever investing, trading, day trading tactics you want to use will win a $1,000 scholarship. And there will be degradations to that prize most likely as well, $500, $300, $200, and so on. And we'll host a number of these competitions every semester. So there's not just one, there are multiple. Some of them will be strictly day trading competitions, some of them will be swing trading, some of them will be like present a retirement plan portfolio, and they'll all have about a $1,000 scholarship cap on them. So there's something to gain out of this. And like I said, you don't have to pay anything for the club. It's free, but you have that open opportunity, so it's upside to the club. The last thing is learning. We want everybody to come into a presentation, whether it's given by us or in the future a Vanguard representative, somebody from JP Morgan, people who are in the industry and aware. We want you to leave knowing more about whatever the topic was that was discussed than you came in knowing, right? Even if you know a lot, you should come out knowing a little bit more about that topic. So that's kind of what we're aiming for. So I kind of talked about this a little bit, but some of the more specific details, if you haven't yet, feel free to join our Investopedia game, right? It's free to join, free to create an account. Go to Investopedia.com, right? And it's very obvious kind of how to get there through the steps. You click game, right? Join a game, and you can search right here, our game, which is TMI game. Make sure to capitalize TMI, or you won't find it. And the password to join is TMI at ASU, right? There are only like 20 people competing right now out of the 200 plus people in this club, right? So it's definitely an open doors opportunity. Oh yeah, take a photo. It's definitely an open doors opportunity. You can definitely make money off of this. And like I said, there will be degradations of this $1,000 prize. But in December, specifically towards the beginning of December, we'll be hosting another competition, which is, I think, a little bit more fun, much more interactive. We'll have about 20 trading terminals set up, 20 computer monitors. We'll have all the equipment there for you, and it'll be strictly a day trading competition. You'll have 1 hour to trade with simulated money in this platform that we've set up, and whoever day trades using whatever strategy they want to and makes the most amount of money within 1 hour will win the $1,000 scholarship. Right? And like I said, that's a cash scholarship. Right, so that's one of the other competitions that we have. But make sure, if you haven't yet, to join this Investopedia game, because that's open door right now.
Yeah, all right, so we're just gonna hop straight into it. So today we're talking about two different varieties of trading. They're pretty similar. So we're gonna start off by talking about, well, I guess, we'll talk about day trading and swing trading, right? So day trading, all that is buying and then selling a particular financial instrument in the same exact day using technical and oftentimes psychological strategies, right? And that's a little bit different from swing trading, which is a style of trading in which you're trying to capture gains in one of those financial instruments over a period of a few days to a few weeks with the use of primarily technical strategies.
Yes. And something that's important to emphasize here is that there's this common misconception. We're not going to cut. Oh, yeah, you have a question?
No, go ahead. I'll ask my question.
Okay, well, there's a common misconception, which is that, day trading is different from swing trading is different from day trading and investing, in that, one necessarily requires that you gamble more than the other. Yes, it does if you decide to gamble, right? Day trading, swing trading, investing, by definition, imply that you need to be using technical strategies, especially in the trading domain, if you are to identify yourself as a trader, right? If you're making a decision because a stock looks like it's gonna go up, you are gambling. You have no idea. To use statistically back-tested strategies that give you some probabilistic edge over the market, right? Strategies that you've back-tested with 1,000 examples and made sure they work effectively, that is to trade, is to use technical applications to either day trading or swing trading or any other kind. But yeah, now we're going to talk about the essentials of reading a financial chart. So Nick, I'll open up TD Ameritrade so you can talk about that.
Yeah, absolutely. So there are a couple of primary components to looking at a chart that you'll absolutely need to know, right? So the most important one, I would say, is candlesticks. So you'll see that every single candlestick makes up this entire chart right here. So if it's green, that means that it went up over that period of time, and if it's red, then it means that it went down over that period of time, right? And every candlestick will oftentimes have a wick attached to it, and that's as high as it went and as low as it went. All right, over here you're gonna see volume. Volume, all that represents is the amount of shares that are being traded over that given period of time, right? And obviously that'll fluctuate depending on the time of day, depending on whether it's during the market or it's when it's during pre and post market hours, right? So there's a time of the day, right, when the market is completely open, right? And that's where, pretty much everyone will be trading. That's from, 9 in the morning to 3:30 in the afternoon. Eastern Standard Time. So obviously on the West Coast we have a little bit more of a struggle with that. So there's a lot of shares being traded like during that time. And then there's also pre and post market hours in which there's potentially higher volatility because there are less shares being traded, less people invested during that time because it's not time when people are usually thinking about trading. They're thinking about work or something else.
Right, so Nick already kind of introduced the concept of candlesticks, but it's important to understand how they technically change and how you interpret candlesticks in different situations, right? So a candlestick, like he said, is just a reflection of how much the price increased or decreased over a certain interval of time. If you have a candlestick that's incredibly high and it's a 15-minute candlestick, that means that over 15 minutes the price increased by roughly that amount, right? By this amount that the candlestick represents, right? It's not just a line graph, right? So the reason that's important to understand that that's what a candlestick represents is that if I were to change my time frame, which is one of the sections here that we talk about, time frame analysis, that changes my candlestick. So right up here I have selected a 20-day 1 hour chart.